Hi, welcome to the East Asia Econ YouTube channel. I'm Paul Cavey. I'm the founder of East Asia Econ. Today I'm going to talk about regional currencies and present an argument that the currencies are too cheap and we should be expecting appreciation, not just in Japan, which is maybe the most egregious, but really across the region. It applies to Japan and the JPY, China and the CNY, the Korean won, and also the Taiwan dollar. I'm going to get into all of that today. But first of all, I wanted to make three requests. The first is, if you are watching this video and you like it, you find it interesting, then please do subscribe to the channel and also let any friends or anybody else, frankly, that you know that this is an interesting channel and it would be worth them watching it. That would be greatly appreciated by me. The second thing is to check out and sign up to our website, eastasiaecon.com. We produce a daily, which is designed for retail investors who want to get a good sense of what's happening with the region, with a lot of charts summarizing what's going on. On the website, you can find a lot of interactive charts. And there's also some visualizations, for example, looking at the spread of Chinese exports overseas, how that's changed over the course of the last few years, what's happening in the auto sector and so on. Like those things are available even if you're not a subscriber. The third thing is, if you're a professional investor, then please check out our full service. So we cover all of the data that's released in the region. We try to look at that in terms of judging where we are with the cycles, looking at central banks, and then thinking about a lot of structural themes and trying to address that back to markets, which is what I'm going to do in the rest of this video. So if that's a service that interests you, a specialized service looking at East Asia, then please get in touch with me directly, paul@eastasiaecon.com. Now, without further ado, on with the show. So what I wanted to talk about was regional currencies, and to make this argument that there should be, there's a strong argument for all of these currencies to be appreciating. Now, what's the first thing? So to put some in context, where are we with currencies right now? And what's the reason that, how can we say they're cheap? So the first thing is in dollar terms. So if we look at particularly the yen versus the dollar, or the Korean won in dollar terms, the currencies have rarely been weaker than they currently are today. So the yen, back up to about 160 to the dollar. The Korean won getting towards 1,500 to the dollar, basically except for the financial crisis back in 2008, where Korea was a very different economy to the economy Korea is today. It was the last time that the currency was this cheap. So if you want to look at in dollar terms, the yen and the won really stand out. Well, you can also look at it in real effective terms. So real effective terms is looking at the currency versus a basket of other currencies. So it's not just looking. So obviously, if you look at the dollar, it's affected by what's happening with the dollar relative to other currencies as well. Looking on a basket basis is a better judge of what's happening with a particular economy. And it also, we can look at it adjusting for inflation. And so this is a better measure of overall competitiveness in the economy. And again, if we look at Japan and Korea, currencies are super weak. Again, particularly in Japan, the currency in real effective terms is the cheapest it's been since the early 1970s. So it's really very egregious. But even if we look at the CNY, the CNY has been, was steadily appreciating before 2020. But today it's depreciated by 20% in real terms from the peak and is now as cheap as any time since 2013. And this is an economy where the export sector really has no problem in terms of competitiveness. So again, CNY, JPY, Korean won, all look very cheap in real effective terms. The one I haven't talked about so far is the Taiwan dollar. And the Taiwan dollar is the one in terms of real effective terms where there has been some appreciation over the course of the last few years. But really in Taiwan, it's still the same argument. Because if you look at Taiwan from a fundamental perspective, so looking at relative to the external position that Taiwan has, it's as undervalued as everywhere else. The current account surplus is 20% of GDP. The trade surplus of the US is 20 to 30% of GDP, depending on the month you look at. Exports last year increased more quickly than pretty much any time since the 1980s. This economy has been doing fantastically well, led by exports and semiconductors over the course of the last 3 to 4 years. The economy has grown. Taiwan's economy has grown by 30% during the course of the last 5 years. Korea's economy has grown by 10%. So it's a very strong economy led by exports, and yet the currency is still right in the middle of the 28 to 33 US dollar range where it's been since the late 1990s. Now we can look at the other economies. Current account surplus also like at record or recent highs, like 5-6% of GDP. They're all net creditors to the rest of the world. Even Korea today, which was a net debtor for a long time, Korea is now a net creditor. So all of the structural side, you've got like the situation with the currencies being cheap. And structurally, because of these external positions, they also look very cheap relative to the kind of the financing arrangement of these economies. And yet the currencies remain weak. So that's the first thing. So, like I would say, the currencies are very cheap right now, and usually that would present an opportunity. Now, of course, like a lot of those arguments could have been made 12 months ago. That then, like, currency is also weak. Like the yen was around 160, the won was very cheap. All of that applied, and the external surpluses. I mean, in Taiwan, not quite as big as it is today, but nonetheless, last year in 2024, the current account surpluses were already very high. So. And now, what was the problem over the course of the last 12 months? Why didn't currencies start to appreciate? And there was a few things that happened. The most obvious one was tariffs. So Trump came in late 2024 promising tariffs. During the course of 2025, he implemented tariffs. Like both the Bank of Japan and the Bank of Korea, because of these tariffs, slashed GDP growth forecasts. Now, what does that mean? Well, that's one of the things that addresses monetary policy. So if GDP growth isn't recovering, then the central banks say that they're going to increase interest rates less quickly. That obviously has implications for how you think about currencies. So one thing that affected currencies last year was what's happening with tariffs, and therefore the currencies couldn't appreciate. So tariffs affected, Korea and Japan, but they also affected Taiwan and China as well. The other thing in Taiwan was something a bit more idiosyncratic, I suppose, which is that the economy did start to slow down, like inflation started to slow down during the course of 2025. So the economy was doing super well, but inflation, which was 2% or thereabouts previously, over the course of the last 12 months or so, started to ease. And again, if you're a central bank, they didn't cut forecasts because the AI sector was doing so well. But the central bank in Taiwan clearly didn't need to worry about inflation. And as a result, that's something else which takes pressure off interest rates. And if there's pressure off interest rates, then that's something that then takes pressure off the currency. The third factor, and this is sort of the inflation side, was even more egregious in China, which is deflation. So if you think about China, like the currency was cheap, but it's cheap in part because there's been domestic deflation. And if there's domestic deflation, then, for the first 6 months of 2025, the central bank in China was steadily cutting interest rates and loosening monetary policy, which again is something because of interest rate differentials, which you would expect to mean that the currency is weaker, not that the currency is stronger. So you could make structural arguments and valuation arguments that the currencies were cheap 12 months ago. But during the course of the last 12 months, various things happened which stopped currencies from appreciating. Now, I think today across the region, those things are now changing. And again, so taking those things in order. The first thing, thinking about what's happening with tariffs. So tariffs, like the threat of tariffs has receded. Tariffs are in place, but they haven't been nearly so damaging to export sectors or to GDP growth as was imagined by central banks and, in fact, by me or by most economists at the time. And so if we look across the region, exports have been doing quite well. There's been no slowdown. Particularly in Taiwan and Korea, exports are doing very well because of what's happening with AI and semiconductors. But even in Japan, right, exports, like they're not rising very much, but there's no sign of dislocation. And the only thing that did happen after tariffs were imposed, which was that the auto companies cut prices of exports done directly to the US by the amount of the tariff. Like over the course of the last 3 to 4 months, even those prices have started to rebound. So the impact on tariffs on the economies isn't obvious. As a result of that, the BOK has started to upgrade GDP forecasts. I would expect to see that we see the Bank of Japan doing the same. So that tariff threat, which prevented some of the currency appreciation that we should have expected, that tariff threat has started to recede. So that's the first thing. The second thing, the second risk that's changed, if you look at Japan specifically, like during the course of early 2025, there was a huge increase in inflation, which ate into consumer confidence. In Japan, as prices have receded, so consumer confidence has rebounded. So in Japan, you've got both business confidence doing better and consumer confidence doing better. And everything suggests that the economy is on like good momentum into the first half of 2026. So there's concerns about the economy receding. In China, the things that's changed is that deflation is no longer getting worse. And in fact, over the course of the last 2 quarters, the GDP deflator has started to improve. It's still negative, but the first time in a few quarters, it's no longer worsening. And I think there's, I would argue that we've probably seen for the time being the floor in deflation in China. And that matters for the currency because, for the last 6 months or so, we haven't really seen much central bank easing. So before the last 6 months, central bank easing was happening almost all the time. Recently, the pace of easing has begun to lessen. And again, if you think about the way that currencies work or the way that market narratives work around the currencies, is often that interest rate differentials are what drives currencies. And so right now, for the first time, you have the US cutting and the Central Bank of China not cutting as much. And as a result, the interest rate differential is more supportive of the currency. So you've got things cyclically changing these economies, which are starting to matter. So currencies are cheap, external positions are very strong, and right now the cycles look better going into 2026 than they look going into the first half of 2025. And so I think the conditions are beginning to be put in place for the currencies to start to appreciate. Now, in addition to that general regional picture, there's also idiosyncratic things we need to think about. And so specifically, issues within each economy. So I think the first thing is in thinking about Japan and the weakness of the yen, you still need the Bank of Japan to do something, right? So it's one thing to say that the cycle is improving and so on. But whenever the Bank of Japan raises interest rates, as we've talked about in other videos, when the Bank of Japan raises interest rates, it continues to say that interest rates at the front end are very negative in real terms. That's not a position that's going to be supportive for the currency. And so in Japan, we can say the regional picture is changing and the cycle is getting better. But one of the triggers that's needed for the yen, I think, to begin to appreciate is to have a situation where the central bank is starting to talk about policy rates moving at least towards zero in real terms. And that's something that the BOJ has yet been unwilling to do. Now, I think the likelihood is that that's what's going to happen over the course of the next 6 months or so, that's the way the rhetoric is likely to change. But so far, we haven't seen that. So that's one thing to be looking for as a change to get appreciation in yen. The second thing, Korea. So Korea has a lot of the same sort of cyclical stuff that's going on in the rest of the region. The big feature of the flow picture in Korea, and the reason that's kept the 1 week over the course of the last 12 months or so, has been enormous retail equity outflow into the US stock market in particular. So, if you look at Korea, you'll know that the National Pension Service has been a big generator of outflows, over the course of the last 5 to 10 years, right? This is a structural phenomenon that the pension fund takes money overseas. But the big new thing that's happened is retail investors. And you were seeing headlines around this. But the numbers, as this chart shows, are really off the charts, right? They've gone from retail investors spending nothing on overseas equities before 2020 to now basically having as much overseas equities in their portfolios as households in Taiwan or Japan do. Now, I think given that rate of catch-up, it seems to me that probably we should be expecting this outflow to start to slow down. Apart from the regulatory efforts that the BOK and others are making in Korea, the very fact from a stock perspective that Korean investors are now quite exposed to US equities, it does suggest that some of this sort of easing of home bias that we've seen over the last 5 years or so, that now starts to lose ground. But that is the thing to be watching for. A slowdown in the equity side, equity outflows are important. For Taiwan, the thing to be watching here is, at least we know in Korea and Japan that the currencies can move, right? They've depreciated a lot over the course of the last few years, and sometimes they appreciate. In Taiwan, we're in a situation where the currency is always kept between 28 and 33 and never really seems to move very much. Now, I think that Taiwan, the thing that to be looking for is the sustained nature of this AI hardware investment boom and the outperformance of TSMC on the back of that. Why does that matter? Because I think Taiwan is essentially sort of like the boiling frog. The Taiwan dollar is like the boiling frog, right? That as the longer that AI and export demand is sustained, the more likely is it feeds into this overheating of the domestic economy. And it's probably overheating right now is a bit of a strong term, but I think there are some signs at least that the economy continues to warm up. And we can see that in terms of inflation, which I think on a core basis has probably bottomed at around 1.5%. We can see it in wage growth, which is steadily creeping up. It's not increasing rapidly, but it is above 2% and continues to rise. The labour market is the tightest it's been in 20 years and so on. So I think the thing to be looking for in Taiwan is an increase in inflation over the course of the next 12 months, which again will be important for central bank policy. The fourth one, China, and thinking about the CNY, like the most important thing here, I think, is what happens with domestic deflation. And if domestic deflation continues to bottom out, which has been the picture over the course of the last 6 months, then again, we're going to see further lessening of the likelihood that the central bank has to cut interest rates. That is then something that, again, feeds into the CNY beginning to strengthen. And importantly, right now, that does seem to be what's going on. So I think, in the last few days, the CNY has dropped below 7 to the US dollar for the first time in a few years. Capital inflows into China have been quite strong over the course of the last, particularly in December, like some of the numbers were really very strong. So it does look like there's good momentum behind this, and therefore the CNY should continue to appreciate. So I think we've got a cyclical picture which looks much better than it did back in 2020, going into 2025 and through the first half of 2025. We've got an external position and a structural position from looking at external surpluses, which is better than it was back in 2025. And then there's these things we should be watching for specific economies. But all of those things look like there should be some change which becomes more supportive of currencies during the course of 2026. So I think it's because of that reason that the currencies are cheap. Now should be a moment where they should start to appreciate. Now, I think there's two other things to be thinking about, which are a bit more inconclusive, but I think worth bearing in mind for anyone thinking about these issues. The first is in thinking about those equity outflows from Korea into the rest of the world. So what's been happening is usually what would happen, particularly in Taiwan and Korea, is the export sector is strong. That allows inflows into these domestic economies, into equities. Inflows means that the currencies appreciate when exports are doing well. When the export cycle begins to slow down, currencies tend to depreciate. In a sense, what we're seeing this time around is the opposite of that. So like in Taiwan and Korea, the export sector has been doing quite well, and yet the currencies are very weak. They're very weak in part because the attractiveness of the US stock market is pulling money out. So obviously the thing to think about is what the flip side of that is. What happens if US stock markets fall and equity outflows therefore stop? In theory, this would mean that because there's no more outflow, when there's a big external surplus in Korea, the Korean won should start to appreciate. But this would be very different from any cycle we've seen in the past. And essentially, you're arguing that the Korean won is something like a safe haven, right? Like relative to the US dollar. Now, I think there's arguments you could make why that would be true, but it certainly is something which is different from the past and is therefore highlighting in terms of a risk in how we think about these currencies. So that's one thing. The second thing I think to think about is the CNY and the role of the CNY in particular. So again, what I've talked about here is like this weakness of the currencies. There's some idiosyncratic things in each individual economy, but it's really very much a regional phenomenon. All the currencies across the region are weak. Now, you can think like one of the reasons is the yen is an important economy. It influences what happens with the won. But the CNY is the biggest, China is the biggest economy in the region. The weakness of the CNY is probably something that holds back currencies in the rest of the region. So if the CNY starts to move, which it is starting to do at the moment, I think it has the potential to put a ceiling on dollar Asia more generally. And again, that provides then impetus for all of these currencies to start to appreciate. So I think the other thing for investors and people watching this video to be paying attention to is what happens with the CNY. If that continues to appreciate, it increases the likelihood that all of these currencies across the region start to appreciate. So just to recap, been through a bunch of different things, looking at what's happening with the cycles and what's happening with currencies and the argument that the currencies here are too weak and they should appreciate. We go through all of this stuff like on a daily basis, tracking where we are in all of these processes, looking at the structural drivers in eastasiaecon.com. You can check out the website. If you're a professional investor and interested in this, then please get in touch with me. Otherwise, thank you for watching. And if you found it interesting, then please subscribe.